Hello, guys, and welcome once again to another breakdown or another strategy review of how we look at the markets based on the experience that we've now gathered on the markets and all the exposure that we now have on the market, both from a retail and an institutional perspective. So, in this current video, I want to talk about US30 and all the opportunities that you could have maximized on it and the current opportunity that you can actually maximize on it up until the year ends and even up until we get to the next following coming months. So US30, the most important thing, the most interesting thing that you must always master is understanding structure. Understanding structure, that's the 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 greatest ability of a trader must be understanding structure. So understanding structure in this case, I'll just do something like this. I want to just start my breakdown almost a year ago. I'm starting maybe around from let me start from October last year, so that you see how you could have maximized opportunities ever since October last year up until today, which is we're now in November, right? So we are going to realize and see that most of you are busy missing out on a lot of money on the market simply because of a lack of understanding and a lack of knowledge. So looking at the markets like this was a simple breakout structure up there, right? This breakout structure there, that's a longer term breakout structure, obviously. Major breakout structure like this. So this major breakout structure, it simply indicated that we're in a bullish bullish market structure or bullish order flow. Us being in a bullish order flow, that was our swing. That was our swing higher low, right? This was our swing higher high up there. This was our swing higher high, right? So it continuing to go up like this, it was simply going to create a higher high, a new high. So how do you know that a new high has been established? When the shift, when internal order flow shifts, right? So if you follow order flow like this, if you follow internal structure like this, you realize that where did they eventually shift up there? That's where they did the shift. So that highest point that shifted that internal order flow, that's our swing higher high, which is higher than this one. So us having a swing higher high like this, the market will come to give us a higher low, swing higher low. Once you know if a swing higher low, the market will definitely um go up to take out that previous swing high and establish a new high. So meaning this is the target. Once we now have established our swing higher low, this will be our target up there. That will be our target up there where we'll be targeting to take profits or to expect a new pullback after that major target has been taken out. So that's a major target up there like that. So this is the current analogy on the weekly. We're in a bullish order flow market. We're in a bullish market structure, whichever way you want to call it. This was a simple pullback. All this bearish order flow, that was a simple pullback that you could have also maximized. You could have also maximized on this bearish order flow, but we're not talking about that for today. For today, remember I said we are starting from October last year up until today, where we are for the sake of time. So if we had enough time, I could have even started as far as up there before it even established that swing high. So that was an establishment of a swing higher high. So this is an imbalance. We also have a fair value gap there. So I marked both the imbalance and the fair value gap like this. Then we keep playing. The most important thing is once you have drawn zones like this, for example, someone could have also drawn another zone here. Someone could have also drawn another demand here. There's nothing wrong with drawing this. This one was mitigated. So these were the only two zones that you're looking for the market to tap and maybe give us that continuation to the upside. So you would have drawn these two zones. Then after you draw those two major zones like this on the weekly, the only thing that you now need once the market comes into your zone like this, what you now need, whether on the daily or on the 4 hour, what you now need is a shift in what we call order flow. Because remember that pullback as that pullback was happening, that market was currently in bearish order flow. It was currently in bearish order flow as that pullback was happening. So it means all these opportunities that you see here, all these selling opportunities that you see there, were simply selling opportunities that you could have actually maximized as it was pulling back. So after drawing those major zones that you're anticipating, the pullback to reach onto all these opportunities to the I mean to the all these opportunities to the downside were simple opportunities that you could have actually maximized on. Starting from here, put back to the supply, you would have sold. After selling there, you would have also targeted this previous level as a target. After pulling back into the supply, you'd have also sold. I'm not going to talk about how you could have entered, but these are basically entries that you're supposed to be entering on those zones. All you need to do is just go to a lower time frame, whether it's 1 hour, 30 minutes, or 15 minutes. Once you go there, you just look for a shift in internal order flow. That's the confirmation that you just need on a minor time frame like that. But basically, those are the zones that you're supposed to maximize and take sales from. So even after coming back to this imbalance, didn't come to the fair value, didn't come to the supply or the order block, but touch the imbalance. Once touch the imbalance, all you need on a lower time frame is a shift. Once the shift happens, that's when you take your sales. So this way, this was the pullback. It's actually a pullback. Don't forget that it's a pullback. That's why having that high time frame information is so key. So here you could have maximized on all these sales coming down. So, right. So even if I go down to the 4 hour, so even these buys that were pulling back, because remember the internal structure of the daily is actually also the external structure of the 4 hour. So currently, even this to the upside, you would have also maximized. Even this to the upside, you would have also maximized. So there are so many opportunities that you would have maximized. So right here, you can see this inner shift. After this inner shift came back to the demand. You could have bought actually down there, targeting a zone up there, which was a supply zone up there, right? That could have been your major target, meaning this entire time as it was going up, your entire bias is to the buying side of things up until we tap into the zone, not only up until we tap into the zone, but also after we shift our internal bullish order flow or bullish structure. So even after tapping into the zone, all you need on a minor time frame is the shift. Once you see the shift, you take the sales from there, targeting this low. After you get that, so these are just reversal entries that I'm also showing you, as well as the continuation entries. So I'm showing you both the reversal and the continuations. So right there, did the shift, it mitigated already here. No need to come back down there as well. The next demand was this one. You could have also taken your buys right there. Taking your buys right there, you could have targeted a major zone up there or this previous swing zones like that, because it usually prefers those extreme supply zones in order for them to do their pullback and before the continuation. So the entire time as it was going up like this, your bias will be bullish. Same thing as it was coming down, your entire bias will be bearish, meaning whatever you're doing on lower time frames is simply getting that lower time frame confirmation or that lower time frame information. So here, once we came from this swing leg up there to this, so the 4 hour like this, these are your swing legs actually, like on the 4 hour, right? That's your swing lower high, that's your swing lower low, right? So once you now have a swing lower high and a swing lower low, all of this is its internal structure. Then that internal structure, you must also have an ability to draw and label properly your internal lower highs, lower lows, like this lower high there, they broke the lower low, lower high, they broke here, that's your lower low, that's your lower high. So as they were moving like this, here they remember as they come from a new leg, which is that one, they maintain that bearish order flow up until they take out this previous swing leg like this. After they take out that previous swing leg, that's when you anticipate the next pullback to come from. Meaning the next pullback, we're not expecting it to, if they are going to continue selling or if they're going to continue being in a bearish order flow, right? We are not expecting them to come and take out this. Once they take out this, it means they're now going up. We're now targeting our major target up there, right? Something like that. So right here internally, you just be following structure, moving with structure. Even if I go down to the 1 hour, which is where I can stop for my main analysis, 15 minute, 30 minutes, those are just entry time frames. So here, right, so here you can see that's a break of structure. That's a break of structure there. After that break of structure, remember, don't forget that this is now your lower high. Like that. That's your lower high. So once that one is broken, it means order flow is now shifted from bearish, where it started up there, bearish. Once we shift from bearish to bullish, it means we're now going up. So right here, you realize that they played around. This was in October, right? Don't forget that this was in October. So as it was in October like this, eventually you can see they established the change of character. That's the change of character. This change of character, it simply means, we're busy coming down, right? Coming down. So our external leg, we are still bearish externally, right? We're still bearish, as I said, that even if they are going to buy, this is still your current range. You're not expecting them to take out this. So meaning Your TPs can either be this swing leg, swing leg, swing legs, and any other supply zone that is at the top there. So once they shift this order flow, that's also another way you can maximize. Another way you can maximize on this buy as well is also to follow order flow. You follow that order flow up until where it shifts as well. That's when you decide to come out. For example, here I can see an extreme supply. There's liquidity above it. Someone could have drawn that zone. Someone could have also drawn this zone. This other zone is also of lower probability. Low probability because there's no liquidity that block collected. So it's low probability. Same as that one, it's low probability as well because it's way, way, way up there in the premium zone. And most institutions, they prefer to buy in a discount. So around here, between these two levels, you're actually anticipating the market to pull back, give you a pullback either here, give you a pullback either here or here. If it comes there, that's actually a good one because they'll actually give you. So right here, our previous low was actually this leg, which is a leg that we're not expecting to be broken. Why? Because it established a change of character. Once it established a change of character, it means we're now going up. If you're now going up, it also means you focus on buying opportunities more than selling opportunities. So as I play like this, as I play it like this, so patience is so much required, especially when the market is not in any of your major zones like this. Patience is required because it helps you to eliminate a lot of noise and eliminate a lot of manipulation from your account. So as you see, they eventually tapped into the first zone. After tapping into the first zone, they gave a slight reaction. Slight reaction. There was no change of character here, so meaning they are still playing around, still playing around, still playing around. They are still bearish this entire time. They are still bearish. They are still bearish until they take out this. If they don't take out this, right. So here, notice that here, this pullback, they have to maintain bearish order flow up until they tap into the region. If they tap here and wants to go up from that region, they're supposed to shift that bearish order flow to bullish. So in this case, they actually failed to change that bearish order flow. They maintained it. How do I know that they maintained it? By taking out this was a low, this was a high, like that. So if ever they took out the high in this first case, they're actually going to keep on going up, but they've actually failed. So that failure on its own, they failed, but they tapped into this extreme supply. So meaning this zone failed and this one, definitely that one has to hold because we've established change of character up there. Establishing a change of character update means this is now a low which you're not anticipating to be broken. Once they come there, that's a sniper entry opportunity that you can even go aggressive, right? So entering there, where is your TP? Remember, we're still trading within this range because swing structure is still bearish. If it's still bearish, it means we can still follow our internal structure or internal levels like this, or that's one way of doing it. Another way of doing it is also following that structure up until where it changes completely. So that one is also whereby you'll be trailing your stop loss. As you'll be trailing your stop loss, you're also following structure. Where structure will change, that's where you also come out of your buys or whatever. So basically, you entered there. Your first TP or your first target is actually the previous, which is actually there. So your first target, you realize that they actually reached it. After reaching it, all you do is follow structure inside structure. That was a high, that was a low. We broke structure. So here, just upon breaking this structure, you could have shifted your stop loss higher, just above, just below here, right? So that even if they pull back like that, you actually secure so many profits there, right? You actually secure so many profits here. They took out this, meaning that was a high, and again, that was a low, like this. So after creating this new high and this new low, you could have also shift the stop loss higher there. After doing that as well, you can see that internal structure kept on pushing up, pushing up, pushing up. So same thing here, where that internal structure is going to shift, that's where you also consider maybe coming out of your buys because already you have taken a lot of profit from the market. So you just be following inner structure. As you follow inner structure like that, where they'll shift that inner structure, that's the first sign to say you can come out. So here, that was a so here you could have actually put all your stop losses just above here. Just above there, you could have also shifted your stop losses. So if you notice, they are keeping on maintaining bullish order flow. They're keeping on maintaining bullish order flow this entire time as they are going up. They're keeping on maintaining bullish order flow, keeping on maintaining bullish order flow. As they are maintaining that bullish order flow, it means if bullish order flow doesn't change, it means we still have a problem, or we'll still keep on going up to the upside. So the most also important thing as well is so that you go to the 4 hour like this. In this case, going to the 4 hour like this, you're simply going down there to identify clear structures or clear levels like this. In this case, they failed to break, meaning the low that was still holding was still this low, because this low failed to break up there like this on the 4 hour, as you can see. So it failing to break there, it's actually a sign that they can still keep on going up. They can still keep on going up. Had they broken that, they were gonna do maybe a shift before continuation to the upside. So in this particular case, you can see that external structure eventually ended up being our entire overall structure. External structure ended up being our entire overall structure. So establishing these high highs and higher lows, you just shift your stop loss to the higher low. Eventually, they established a major change of character, which is there. Major change of character like this, it simply means we are now in an overall bullish market. Not only bullish market, but it's simply a continuation now. We now have a swing leg, meaning that change of character up there. We now have a swing higher, low, a swing higher, low. Where is our swing higher, low, a swing higher, low? In this case, our swing higher, low, the lowest point that changed that character or that shifted that major order flow there. That shifted that major order flow, not this minor order flow. This minor order flow shifted. You could have gotten these buys, you could have followed through all those buys. But now, so here, what does this mean? This means now that once you now have a change of character like this, on the 4 hour, right? You need to be so careful about structure. You need to be so much observant when you're looking at structure, right? So in this case, after that major change of character, obviously you anticipate a reversal before a continuation. So you realize that that inner 1 hour order flow that you were busy bullish the entire time, they can actually start to be bearish just to facilitate the pullback before the continuation. Why? Because we have established a change of character there on the 4 hour, which can be followed by a pullback before a major continuation. So the next pullback that you enter, your target is up there, because that's now our major target up there. So even if you want to look at external structure, you can say that that's your lower high, that's your low. Once that high has been broken, we now want to see a higher high. Where is our internal higher high on the 4 hour? The high that is going to shift order flow. You should notice all these higher lows, on the 4 hour, they're not being broken. Touch, they're not being broken. So where that break happened, that's your higher high. Once you now have a high, market must drop to give us a higher low. A higher low, in this case, where do we anticipate it? They tapped this demand. We also have another demand down there. This one was mitigated. We also have another demand right there. So these are all levels that you can draw. After drawing such levels, all you need to wait for is to wait for the market to come into any of your levels. Even if it doesn't come to any of your levels, you can also follow structure. As you follow structure, you just notice where does structure shift, where this structure will shift from bearish order flow to bullish order flow. That will be your internal structure, higher low. Once you now have a higher low, the market will continue not only to take out this high, but also the external high. Both the inner high and the external high will be taken out. So in this case, they kept on maintaining bearish order flow. As you can see, that was now in January this year. They kept on playing around. So throughout that entire time, you need to be so careful about structure, because structure is very important, and also your ability to read structure is also very important. So if you're not able to read structure, you're going to have a lot of problems on the market. You're going to encounter a lot of challenges on the market. So this was a zone that they established. After creating this zone, you can see that. So right there to the left, take note that I said once they shift this from bearish to bullish, that's your swing higher low. So swing higher high will come down and establish a swing higher low like that. So in this case, they are still bearish because they haven't taken out anything. They're still maintaining bearish structure. So after maintaining that bearish structure, you can follow structure. Here, that was a selling opportunity there. Because of structure. After taking out or after establishing a change of character there, the only supply zone that they left out was that one. So that being a supply was the first point that you could have entered yourselves up there. Not only that, as well as the shift here, this shift of inner structure like that. This shift of inner structure it made that high, an internal structure lower high, like this. So notice, once you now have, so this is a high, lower low, they came back here. You follow structure. So this entire time they were still being bearish to facilitate that pullback. After that pullback is done, they'll actually change or shift that inner structure up until they take out this first high, and the next high that they must take is actually that one at the top there. So that's a change of character there. Then right here, we're now anticipating a break of structure, right? Break of structure, not only a break of structure, but also a shift in order flow, a shift in order flow. You can also go to 1 hour if you want to read structure more clearer with precise things and everything. You can actually go to the 1 hour time frame. There you actually find better structures or better meaning to structure. So there as well, you can actually see that here. Right there, we established a demand. After that demand was established, what was the next thing that the market did? So here previously, they taken out this low. Then here they took out the high. Took out the high by stripping off liquidity. Came back to test the demand. You would have actually started buying there. In March there, you would have actually started buying there. You're buying there. The next thing as well, they came down here. Coming down there, they went on to break minor structure. After minor structure was broken. So all of this entire time, already they've shifted order flow. As you can see, order flow shifted. And once order flow is shifted, they're now targeting their previous leg, which is up there, right? They're not targeting their previous leg, which is up there, meaning even this buys, notice something here that is so interesting. Change of character has happened, right? After the change of character has happened, it means we expect a pullback, which was this one. After the pullback has happened and ended, how do you know the pullback is ended? By the shift of inner order flow. After inner order flow shifts, it means you can hold these buys that you enter here as far as up there. Why? Because we are still in a bullish order flow market. We expect the highs to be taken out, meaning if you've been taking this trade just like this, as it will be going the entire time, all you do is focus on structure and persist or maximize on that bullish momentum or that bullish movement to the upside. So this was a major trade that you could have also taken down there, targeting there, up there, like that. So even these sales I showed you, I could have taken the sales as well. I would have taken this first sell as well as that second sell. So the first sell, you could have taken it. It could have closed on break even or small profit, which was not a problem, which was not an issue. The next sell you could have also taken, which also did close quite well after taking out the level as well as touching the next level. So you could have also followed it as far as where it shifts order flow. So where it shifts order flow as well, that way that was gonna be, which was here, that was going to also be a time for you to come out. So basically, as it will be going up like this, it maintains that bullish order flow up until they take out that high. Once they take out that previous high like that, they'll keep on maintaining the same structures. Even if you go to the 4 hour, right? This is the 4 hour. Change of character, pull back. We're now continuing. So this continuation, I want you to notice something that is so profound about what literally is happening here. Change of character here, they pulled back, right? Their target now is this one. Once they take out this, the next target is up there. Meaning, inner order flow. Where did inner order flow change character, basically? Where did inner order flow change character, basically? That's the real question that you must be asking yourself. There, that's where change character. After change of character, they pull back. Same thing with this inner order flow. After changing that character up there, they actually did pull back. Major character there. After it was taken out, they actually started pulling back, which is what they are doing now. That pullback, all you do is target, draw your zones properly. Once you draw your zones properly like that, after you draw your zones, that's a zone that you can actually also scale in on. If you want to scale in on any trades or any opportunities, that will be around that vicinity or around your zone. So at the tip of your zone, all you need to see is a structure shift or a market structure change. Once it changes market structure, then the next thing that you do is just enter your trade. So, but basically, this is how far you could have held it. All these pullbacks could have just been other trades that you add on to the current ones that you have. So basically, that's a pullback. This pullback is a pullback of this change of character. Change of character, pullback before continuation. 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 So that was also an opportunity to buy. Remember, it's not only about drawing zones. It's not only a matter of drawing zones. I want you to see something here, something that is also key, right? There's also a demand here, but that's not really the case. So this change of character, you want to know and see how far the pullback will happen. You can simply trace structure. As you trace structure, you can also see where structure changed. You can also see. You can also see where structure changed. Where structure changed. In this case, they're coming down, coming down, coming down, coming down strongly, like this. So structure changed roughly around here. After structure changed and shifted, you would have waited for this demand. You would have gotten another sniper entry to the upside. This sniper entry to the upside, your target is still the same up there. Your target is still the same up there. The previous high, either this one, this could have been your first. Then that one, your second, which is the medium one. First, second, then third, up there, like this. This could have been your target. Meaning entering here, your first target is that one. Your second target is that one. Then your third target is way, 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 way up there. Because on the 4 hour or the daily, you realize that we are still in a bullish continuation pattern because we've established a swing high low. Once we've established a swing high low, we must come and take out the previous high. So basically, whatever is happening, they are still maintaining bearish, bullish order flow. I mean, to facilitate that. So you see, they came, took out the level. They took out the level, which is the first level, which is not a problem. Wiped up liquidity, which is okay. Beautiful, 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 beautiful. TP was hit. After TP was hit, first TP was hit. After first TP was hit like that, they can even pull back again, give you another set of buys. They can even pull back and give you another set of buys. So right here, it was now in June this year. But all these were major opportunities that you're supposed to be scaling in. This one you were gonna hold maybe up to there if you want, or also just follow the inner order flow. Let's go down to the 4 hour. That's where your main analysis is found. Your main analysis must always be found there on the 4 hour, daily, 1 hour, up there. So this was a demand. That was a demand there. There was a fair value gap there. So after that break, we can even pull back into this fair value gap or that demand before we continue to the upside. So that's also other points that you must just be aware of. So once you see the shift, it means already they are going up, which is this trade already that we ended there, which can continue, all the way to that first target once or before we reach second target. So guys, this is what is going on each and every single day, each and every single week on the financial markets. This is what is going on each and every single day, each and every single week on the financial markets. Breakout structure up there. So they haven't reached this first major target like that. Whereas now in August, they did the shift, inner shift. Once they did that inner shift, you would have taken sales. Inner shift, they did the inner change or the inner shift, whatever you want to call it. After it happened, you could have sold here on this supply. You would have sold there on that supply. Nicely, taking your sales there. All you're targeting is maybe an extreme demand, because that extreme demand will give you best buys. Sells there. You would have followed structure, extreme demand. I have an extreme demand that was left behind for liquidity, which is this one. Right. So once they come and tap there, so even here this entire time, you're just following internal bearish order flow, noticing what is your high, what is your low, what is your high, what is your low, which one is your swing high, which one is your swing low. So example, in this case, that's my low, that's my high. So it coming back to my high like this is an opportunity, bruh. This is an opportunity to sell. That's a sniper. These are sniper sell opportunities as well as buying opportunities. So they kept on maintaining bearish order flow, bearish order flow, bearish order flow. Where they were maintaining that bearish order flow, could have actually been scaling your stop loss or shifting your stop loss. That's a low there. Same thing here. This is a low. Like this break, break structure here, break structure here, then change character there where they're going to take out. So they took that out, making that a change of character. Once there's a change of character, all you need is targeting this demand. So notice that on the 4 hour, what is really going on the 4 hour? That's the most important thing. This is the 4 hour. Let's zoom out and actually see what's going on. Why did it pull back to give that continuation? It's because of this major breakout structure. That major breakout structure facilitated this pullback, meaning here, we now had the swing higher high. Then this one is our swing higher low because it changed this character, right? So the same thing here. Once we establish this as a swing higher low like this one, once we've established it by this sub-internal shift in order flow here, we get a pullback before a continuation to take out this. Same thing here, I'm anticipating a pullback before a continuation to take out what? Take out this previous high. Not only take out the previous high, but also this extreme external structure high. So this is what I'm anticipating currently on US30. So even this sale I said you could have sold, I showed you how you could have sold as well there. All the way up there, up until structure shifts like that. So these are major opportunities that you could have maximized on US30 ever since last year, October. These are major opportunities that you could have maximized ever since last year, October. Ever since last year, October. These are major opportunities that you could have maximized. So let me keep on playing. Let's see if there's anything else. So that's where the market is currently. And I'm anticipating something like the same change of character here that changed order flow in order to continue. The same this one, same with this one, same with this one. Gave a pullback before a continuation. Same thing here, pullback before a continuation, something like that. So guys, this is my US strategy, the way we look at the markets, me and my students, as well as those that are in the mentorship class, as well as the $1 million class, as well as various groups that we trade in. But basically, that's my anticipation right now. So before that anticipation happens, you can actually see that we must have a shift or in order flow or a shift in order flow or a shift in internal structure. Once internal structure shifts, it means we can create a once internal structure shifts, it means we can now enter our cells. We can now enter our cells. Once we can now enter our cells, that will be beautiful. So, but so far that was how you could have maximized. That was some of the opportunities that you would have maximized in a long run for a very long time. So guys, thank you for watching. Thank you for liking the video and sharing. See you in the next video.